Hey everyone, welcome back to the Capital Mindset Show. Today we're going to be actually revisiting a company we haven't talked about in a while, and that is Salesforce. So this is was an open invitation, I guess, from Strongman Personal Finance, who recently just did a video on it. I had forgotten whether or not I did one or not, and I will show you a really good resource that I'm starting to use myself, by the way, because it's just too much to keep track of. So this is actually the content library. You should find it in the description below. It's just a sheet that keeps track of basically every video I've ever made on any topic. So I found out this morning I did in fact do a video way back in the day, and you can see there I press Control F and I can find the video. It's labeled Salesforce CRM. I search it by the ticker symbol. It's not case sensitive, by the way. If I just type in CRM in lowercase, it still finds it. And December 24, 2021. So as easy as this, I can just click here and then actually pull it up. All right, so you can see again, it is published December 24th, 2021 here on YouTube. And essentially, I'll just run you through the summary. It was, in my opinion, at the time, overvalued. And you can see the price at the time was $255.59. You can watch the full video to kind of gauge my personal opinions regarding what the growth prospects are. But in summary, at the time it was overvalued. I mentioned at one point that depending on what it is you're doing or what your strategy is, I think that most people who are maybe momentum investors might be maybe interested in that company. However, that did not really play out in terms of the forward momentum. It actually was not so good, right? Because we had the liquidity crunch actually starting in December. There were some older videos in December when we talked about it. January, it kind of, in my opinion, was in full-fledged. No one was really talking about it. And then now if you fast forward to today, depending on what YouTubers you guys watch, you probably heard the word liquidity crisis a lot, actually. But it is nothing new to the Capital Mindset viewers. This is actually old news. And I'm very proud because I notice when people use the word liquidity crunch, I'm like, haha, you know. But now, regarding that. All right, so we're going to look at Salesforce from, I guess, new eyes or fresh eyes. And we're going to pull up the performance. So if I pull up Salesforce right here, you can see that today it is up 7.49% to $189.25. If we kind of remember, the price over here was $255. So back here, $189. Now this is actually recovering up from a low about $155. So you see it's up about 21.63%. I didn't have an opinion right then and there, but I'm giving my opinion now. Okay, so taking a look at it from a gap basis, you can see back there that the PE ratio is 183.70. Okay, well, that's on a gap basis. So maybe we can see the cash flows and see what's going on. One thing I do remember, and kind of building upon these thoughts, is if you go look at the old video, I do talk about that share dilution being a bit of a problem. The share dilution at the time on average was about 7-ish%, which is rather extreme. However, you got to keep in mind that they did two acquisitions. They did Tableau and Slack. So those were really big acquisitions. And if we kind of extrapolate from that, the meaning, we might see on their balance sheet a ton of goodwill impairment going forward, or at least amortizations, not necessarily impairments, but we might see that, okay, if things aren't panning out as much as they thought they would. So regarding the business as a whole, we kind of take a look at the max performance. It has been a decent performer, I guess, since its IPO. 4,600, there are some stocks that perform better, yes, but nothing to shy away from. And if we take a look at the 5-year, it has still done pretty good, up about 108.29%. It's not that it's done poorly over the past 5 years. It's just from this point, if someone was buying, you are down 38%. So we're about 38% down from all-time highs. Now, from here, I'm going to actually take us to the financial statements, and we're going to see what they have showing for them. So as I suspected, you can see the line item of goodwill. Line item of goodwill is about $48 billion, and it's still going up. So that we can stem or kind of attribute to those acquisitions that they're doing. If we look at debt versus cash, they look pretty good. They look okay. Non-current debt is about $9.5 billion, while cash is about $6.8 billion. So nothing to kind of be worried about there. If we kind of look at some other kind of line items, we do see marketable securities, which is probably their bonding holdings. So they do have, in totality, probably more cash or cash equivalent items with marketable securities than they do debt, which is good. Okay, so that's a positive. And we look at the current portion of debt, they have plenty of cash to actually pay that. So on a balance sheet perspective, they have nothing really, there's no problems there. Now, if we go over to the condensed, okay, so this is actually where I wanted to pull this up. We're going to try to find this is breaking down the different operations. I want to find the Well, actually, I think we'll find it even better here. Yes. Yes. So net cash provided by operating activities, you can see there it's about 3.6 billion. Look at that net income of 28 million. Okay, 28 million looks very poor. 2021, it does appear as though it is coming down. Well, let's see exactly why. Well, I see that stock-based compensation is about 776 million. And by the way, this is just for the 3 months. This is not for the full year. So stock-based compensation is increasing rapidly. And that is a big portion. Now, let's take a look at some of the other non-cash items that they did. So unearned revenue, okay, that's fine. They can do that. And accounts payable, okay, that's fine. My main concern here, again, is continuing with the stock-based compensation expense. It does seem that it's growing and in terms of absolute size rather than anything. And that's a bit of a problem because that is the issue that a lot of investors kind of fail to realize is the slow but sure death by 1,000 cuts. Okay, that can be share dilution. So it doesn't matter that much that the company is growing. Let's say it grows by 50%, but let's say it dilutes by 100%, you're actually worse off in totality. So keep that in mind when you're actually looking at these companies, that the dilution rate does matter. But then you get to the other extreme where some investors, take it to the other end of the spectrum, and I would disagree with them on that front too. So I think in totality, we are seeing a business that is operating really well. When we look at, for example, let's actually take a look back at the assets because we should see this here. Accounts receivable is fine, but they do have, I saw in their earnings report, they have a backlog of orders to the tune of about $40-ish billion in terms of that's the total contractual values that they have. So I think on that front, we are kind of observing that there is a lot of demand for their products. There's a lot of switching costs for their products. You might have heard this, again, elsewhere on the YouTube universe. And so when we think about Salesforce, we think about those qualitative aspects that are, showing us this is a quality company. There's nothing that I'm debating on that front, okay? What I am kind of pushing as a contention is the valuation prospects. The valuation might be a bit high relative, or at least it was back then. We'll actually see for ourselves this time, but it might be a bit high relative to previous estimations. Now, as far as how growth is projected to go forward, we'll actually take a look at that now. Growth rates are about, going to be 25%-ish this year, 20-ish% next year, maybe mid-teens to high teens for the next decade or so. And that's at least what the market is kind of expecting from this company. Whether or not that kind of manifests itself is a different question. I think it's probable. I think there's plenty of room to grow. This industry is only just scratching the surface, and there is more room to grow than what people really think. Of course, we have to also consider the prospects of competition. This isn't a monopoly by any stretch of the imagination. Salesforce, however, does also have an interesting part of the ecosystem. I might have covered this when I talked briefly about Viva Systems. Viva Systems is another company that operates under kind of the similar bedrock platform of CRM. And so what we see, Viva Systems, by the way, focuses primarily on medical care solutions. Salesforce is kind of more broadly speaking, okay? So Salesforce's products are entrenched everywhere. They are in a lot of places, to say the least. And I think, again, this is a good business. Now, let's actually go over to the model valuation to kind of pencil out what we can kind of estimate here. So I went ahead and plugged it into the model here, and we can see that analysts do have a strong buy rating and with a price target of about $216.11, which implies a 14.04% upside. So just on that, you can just take away that. All right, but on to the other stuff, I want to actually highlight some other key factors. The model is actually projecting out that it doesn't have a risk of bankruptcy, go figure. Estimates actually are coming down by some analysts, probably because of a slowdown. That might be revised estimates. Cash flows are also expected to take a bit of a hit, again, probably because of slowdown in B2B consumption. And shares outstanding have consistently gone up. So I've actually slowed it down in my estimations. I actually discounted it by about 15% here. And we are actually showing a bit of dilution still going forward because I do think that. And I still am working really hard to kind of convert people on YouTube that just because a company is profitable does not mean that they won't dilute. There is a very silly individual out there who's a very large YouTuber who actually espouses that information a lot. And I always come into I find a lot of people who still believe that, and which is unfortunate. But we can't let that person really get away with that because it's really silly. And supposedly as a self-proclaimed expert. That's a bit of a problem. But regarding the company, or sticking to Salesforce as a topic here, I still think that they are going to utilize share dilution because it is rather cheap if you think about the stock being expensive. And in fact, I do think that the shares are looking a bit expensive. So if the management is doing their job right, they should be diluting at these levels. Now, if you're looking for less of a margin of safety, you can kind of already make the argument at the higher points of growth, and the price was just there where you could have made those more conservative measures, well, slightly more conservative. If you wanted to make even more conservative levels of growth rates, I would say that you'd have to wait for a much better price, okay? And like I say, that there's infinite or many different variations of how someone can build a valuation, and so that will kind of distinguish whether someone will be accurate or not accurate. And I've talked about this here and there because there's many channels that kind of show you. There was one channel that I was shared around in the Discord, I think more for comedic relief more than anything, that projected out, and I won't shout them out or anything like that because I don't want to, it's not to make fun of anyone. So their projections were very conservative. So they came out with a valuation that was close to probably around $8 on the low end and like $30 on the high end. I think that's a little bit on the erring on the side of ridiculousness for something like Salesforce especially. And so that is all subject to the quality of the evaluation being done. So that's the problem, right? So there are tools that exist, but they're, at the end of the day, they're just tools. And then defining on how we design the tools can actually vary from person to person. And there are objectively better ways to design tools and objectively inferior ways to design tools, which will then reflect itself in the accuracy of the model going forward. So what we have here is something that I would kind of indicate to myself that I'm not yet entirely interested in this company. I do acknowledge its quality. This is something that my wife was involved in the past. So as far as my recollection goes, and I should know this, so I apologize for not knowing this off the top of my head, that she, I think, does not hold currently a position. We sometimes I don't look necessarily at her positions. I kind of have a vague understanding, and then we try to use that vague understanding to diversify in our own respective ways. So she might still hold it, she might not still hold it. But either way, I'm going to be objective and state here to everyone that I think that Salesforce is not at the price point where I would be interested in purchasing today. However, if it were to kind of come down, I could still be comfortable with the dilution rate that I do think they're still going to continue to do, and with the prospective growth rates. So on that note, guys, thank you guys so much for watching. Again, if you want to check out other videos like this one, and maybe it's a ticker symbol that you are interested in and I have covered in the past, be sure to check out that content library. I think it's a really good tool. I started to use it too to actually see, have I covered this in the past? I wish I had a perfect memory, and so I think it's also a good tool for me to see, okay, what did I think before, and has my thoughts changed since then? Because things can change. Okay, just like how I say things for this company can change. They can change for the better or for the worse. Okay, but on that note, guys, thank you guys so much for watching, and I'll see you guys in the next one.